Credit cards, they're a miracle. Go shopping, go to a restaurant, just whip out your plastic and you're paid up. Plus you pick up some rewards points while you're at it. However, there's a dark side to credit cards. They're like the financial Jekyll and Hyde, the two-faced beast we need to be careful around, especially in a recession. When times get hard, credit card companies get a little nasty, a little more tight-fisted. You might find yourself paying higher interest or your card limit dropped. The point is, credit card companies play tricks. If you fall for them, that miraculous card essentially turns into your nightmare ex, wasting your money, gaslighting you into paying for extra services, and never really giving you the respect you deserve. But the good news is, unlike your ex, credit cards are reasonable. You can make the system work for you. You just need to be one of the knowledgeable few who understand how these tricks work. The first tactic is one I've personally used to bump up my credit score 70 points in just 1 month. See, there it is. I put a large business expense on an old card, and as you can see, it jacked up my score. See, 30% of your score is utilization, how much credit you use. This trick hacks that system. All you need to do is pay off your cards completely except for $1 the day before your statement close date each month. Then you pay off the last dollar once you receive the actual statement. Seems weird, I know, but credit card companies report statement totals to credit agencies, not total credit used. So if you've paid your bill before it comes due, there's no debt to report and your available credit utilization skyrockets, dramatically boosting your score. Seriously, it's that easy. Try it. Set yourself a calendar notification to drop a comment here in 3 months and let me know how much your score went up. I am that confident in it. Now, I can't go any longer without telling you about the dark side of minimum payments. Again, like your ex, they're small, they seem nice at first, but the truth is, it's all a scheme to just waste your money. Take a look at this credit card bill. Notice how that minimum payment is a tiny fraction of the amount owed. It's a clear case of that Jekyll and Hyde good and evil nature of credit cards. You might feel like your credit card company is doing you a favor by giving you this small, easy to pay bill, but it's not. Because if you only pay that minimum amount, you will never pay the debt off. Okay, I'm exaggerating, but hardly. Let's say you just moved into a new place and bought some furniture, a new big screen TV, and a couple scented candles. Your apartment is perfect. And now you have a credit balance of $5,000 at a typical interest rate or APR of 19%. If your minimum payment is $100, 2% of the total, at that rate, it would take you more than 30 years to pay off the bill. Think about that. You know how great of a feeling it is to make passive income, money in your account while you sleep? There's literally nothing better. Well, that's what credit card companies do to you if you pay the minimum every month. And here's the thing, that $5,000 debt, that's actually the average credit balance in America today. Total consumer debt has doubled in the last 20 years. So don't let card companies turn you into their personal cash cow, milking you whenever they feel like it.
Who's a little milky boy? You like that, you milky boy, don't you?
The all too obvious fix here is just pay off your cards. But if that's not an option, look into low interest rate cards and do a balance transfer while you pay down the bill. Now, what if you're having a hard time making payments, period? Like even the minimum payment. The recession got the worst of you and you lost your job. Things are bad right now. You look at that credit statement and the minimum payment, it's only $40. I can skip it. No one will miss it for a month, right? And yes, the sky won't fall, the world won't come crashing in, but you can guarantee your lender has taken notice. Behind the scenes, things are happening. You've been added to the list. If your payment is more than 30 days late, it will be reported to credit bureaus and your credit rating will take a significant hit. This can easily turn into a vicious cycle. You may now get rejected a car loan, denied a home, or face insanely high interest rate hikes, making it even harder to repay. Maybe your ex was right. Maybe you're just a little loser. She's absolutely the worst. But none of this would have happened if you didn't miss a payment. All of a sudden, you're on the credit system's bad side. You're a problem that needs to be dealt with. So if at all possible, make that payment on time. If you can't make it, contact your credit card company right away, before it's due. They might be able to delay your due date or waive those fees and interest. In situations like this, it's always better to keep the lines of communication open. But don't chat with them too much, because next thing you know, they're going to be upselling you with cash advances. Say, for example, you have an unexpected expense. You've gone hiking in the Himalayas, and it turns out your Sherpa only takes cash, but you won't have enough in your account to cover your trip up the mountain until your paycheck drops next week. Relatable, I know. So you take out a cash advance from your card and you pay the mule rental. No problem, as long as you pay that advance back the moment you can. Because unlike regular purchases, advances have a clock that starts ticking the moment you use it. Tick, tock, tick, tock. Every single tick is more money out of your pocket in interest. Worst of all, some cards charge an upfront fee for cash advances up to 5%. And of course, lenders will make it really easy to take a cash advance, playing into our psyche, making us feel like it's near free money. It's not. Like all of these financial instruments, they're convenient, but they really only should be used when there's no other options available and never held long term. Now, before we talk about why a recession is the worst time to hold a big card balance, I need to tell you about today's sponsor.
Well, this is where we had a nice, highly produced ad, but if you saw my post, we're no longer doing that kind of ad anymore. So that being said, I want to encourage you to check out Fanova, which is linked down below. That's our homegrown, home-built version of Patreon, helps support the channel, and on top of that, you get so much more content. You get direct access to me, you get everything I'm buying and selling and investing in. There's coaching every single day, live coaching, more cat pictures. So if you want to support the channel, support me, and support this guy, link down below.
Now, a massive issue can pop up if you hold a large balance of any kind on a credit card, especially in a recession. We know from history that when times get tough, banks get stingier with their credit card lending, often reducing customers' credit limits. And if this happens to you while you're carrying a high balance, your credit score can tank. Again, going back to that credit chart, 30% of your score is utilization. If your current credit limit is $3,000 and you spend $1,000, you're using 33% of your credit. If a card company decides to drop your limit to $2,000 thanks to a recession and additional risks, you're now using 50% of your credit and your score will drop. Generally, you don't want to use more than 30% of your limit, but to be honest, 5 to 10% is ideal. And totally doable if you use that $1 trick from earlier, paying it before the statement date. Now, if your current limit is still far too low, you can give your card company a call and try getting a higher limit, or you can explore getting another card. But be careful. Do not apply for too many cards at once. Basically, any time you apply for a credit card, your credit rating takes a small hit. The more credit cards you apply for in a short period of time, the more those hits pile up. This is because when you apply for a card, your lender does what's called a hard inquiry. This is an investigation of your credit rating for the purpose of giving you more credit. And when someone makes a hard inquiry about you, your credit rating drops. This actually happened to me once. A credit card processor I was signing up for ran 4 separate hard inquiries on me for 4 separate businesses. And my score dropped like 25 points all in one day. It was super annoying. So when getting a new card, do the research up front and only apply for the ones you absolutely want. You'll avoid any issues on this front. But of course, there's a flip side to this as well. You don't want to get rid of cards either, especially in a recession when getting a new card may be harder than ever. This is because your credit score is made up of many things, not just your track record of paying bills and debts, although that is the biggest part. You need to pay attention to the average length of time you've had credit. The reason why is equal parts annoying and obvious. Let's say you've had a credit card for 7 years. That means in your credit rating, you have 7 years of credit data. Now let's say you get that new card and cancel the old one. In your credit history, that 7-year stretch will disappear from your record over time. Well, your new card has hardly any history. Why they can't simply take a snapshot of that data, I don't know. But the point is, if you have an old card you don't use, you're far better locking it away in a safe instead of canceling it. If you have one of those rewards cards with annual fees that you want to get rid of, typically all you need to do is call up your lender and downgrade to a no-fee card while keeping the account open, keeping that track record you built up with the card, and it shouldn't hurt your credit. So when it comes to credit cards, there's really only ever 2 options. Take advantage of them or let them take advantage of you. But the good news for us is mastering the credit card is easy. So remember the basics. Minimum payments are not your friend, and don't spend more than you make. This turns you into the cash cow. Remember, the economy changes things. Your credit could be lowered. New cards may be harder to get. Plan accordingly. Remember the tricks, like paying your bill off before the statement date to boost your score. And remember, according to card companies, and your ex, you're only as good as your last paid bill.